My name is Jeffrey Kennedy and welcome to Trader's Classroom. Today we're going to have some fun with the price chart of the Japanese yen. Now before I describe today's lesson, go ahead and pause the video and take a few moments and try and label the price chart. And then I'll show you my labeling and then I'll share with you my thoughts as far as today's lesson goes. Let's begin. Okay, well, welcome back. I hope you took a moment, paused the video, and actually took a shot at labeling this price chart yourself. Well, you may come up with an interpretation such as this. And as you can see, this is actually a fairly aggressive interpretation. It identifies this as a wave 3 top, WXY. We have a quick ABC here for W, X wave, and then another 3-wave decline for wave Y for 4. So this is clearly a corrective decline, clearly also identified by it being contained within parallel lines. Subsequent price action we can label as waves 1, 2. This is a leading diagonal for a smaller wave 1 and then expect a pullback, most likely back to at least at or near the prior extreme right here. Look for a small wave 2 pullback, maybe a 2 or 3 day decline, and then therefore or afterward I'm expecting a sizable move to the upside, actually to new price highs, because as you know the daily and weekly trends in the Japanese yen are to the upside, and the most recent decline we've seen consists of 3 waves. That sounds like a fairly compelling argument, certainly if I'm talking really fast. Well, maybe this wasn't actually your interpretation. Maybe it's something along these lines. You have a clearly corrective decline here. It's certainly not a 5-wave move, or certainly not an R and Elliott 5-wave decline. And the subsequent price move here consists really of only 3 waves or 3 price moves so far. You have an initial move up, 3-wave pullback, and then you have this very laborious advance here. In fact, if we actually look at some of the momentum readings of this current advance we're seeing in the market, it's actually very anemic. The last 2 weeks worth of trading really hasn't given us that much. So we could actually be looking at a flat pattern where we have a 3-wave decline in wave A, a 3-wave move up in wave B, and we're actually going to see the yen top out and then give way to a wave C decline that's actually going to push prices back to below the A wave extreme. Was this your wave count? Was this your interpretation? Or maybe it was something along these lines. Well, if you have a 3-wave decline here in wave A and a 3-wave advance that actually tops out at or near current levels, we could be working a very large contracting triangle. And if you look at, say, the daily and weekly price chart of the Japanese yen, the yen seems to like to form contracting triangles. So this is actually a very possible or very probable scenario, because many times what I've learned over the years is that many markets are like individuals. They like certain things. They like certain patterns. And the patterns, a number of patterns clearly evident on the daily and weekly chart level in the yen, are those of triangles. So this actually could be a contracting triangle in the dollar yen, in which case we'll most likely move sideways into the, say, September, and then at that point see the culmination of the pattern and then see prices again resume the larger uptrend. Maybe this was your wave count, or possibly something like this, where you have that, again, WXY for that clearly corrective 4th wave decline. Again, the move to the downside is contained within parallel lines, so we can confidently identify that move down as a counter-trend move. It's certainly not a 5-wave structure. But this move to the upside, again, very laborious here. Even if we take a look at, say, another tool, this is our MACD tool. Notice that the current advance, even though we're at or near current extremes in price in the dollar yen, the momentum on this advance is much, much less than what we experienced before back in June. So you could make the case that we're actually forming some type of ending diagonal where we may rally into next week and then put in a very significant top. In fact, that top would most likely not signal, that would actually signal the termination of what we've seen on the daily chart level and probably what we've seen on the weekly chart level. So that could really lead to a very massive decline in this market. Okay, well, here's today's lesson. Utilizing the wave principle as our primary tool in today's lesson, I've identified a number of different wave patterns, which I think are possible and very probable, actually, because each one, again, adheres to the rules and guidelines of the wave principle. Well, this being the case, we have scenarios here, for example, the flat pattern that we could go for that calls for a sizable decline, again, back to 120, 119, maybe even as low as 118. Conversely, we have this interpretation here which says the yen is immediately bullish. Well, if the wave principle is going to offer me either or scenarios, what good is it? Well, that's actually kind of an immature question to actually ask, because what the wave principle does is it allows me to be prepared regardless of market direction. I know what to anticipate or expect if the market goes up. I know what to expect and anticipate if the market goes down. And the value of that, in my opinion, is it allows me to think like a trader. In other words, I can actually begin to develop and put together comprehensive buy-side and both simultaneously sell-side trade plans. For example, let's look at the information again. We have one interpretation here, which argues that the yen is still bullish. We have one interpretation here, the flat, which argues that we're going to be topping out quite shortly. We have another interpretation that we're going to be going sideways. But the immediate move down, say over the next 2 to 3 weeks, would be actually a decline. So we can put this interpretation into the bearish camp. This here is a bullish interpretation, but only short-term bullish, maybe for another week or so, because ideally we'll see wave 5 here push back beyond the extreme of wave 3. So this is, I say, a moderately or a very mild bullish interpretation. We'll put this interpretation into the bullish camp, and that was our final interpretation. I apologize about the blank slide. Okay, so how do we actually utilize this information? Because we have two scenarios. These two are bullish, and then we have two scenarios which are actually bearish. How can we utilize this? Well, what we have to now do is take off our analytical hat. And as I've explained before, as an analyst, my job is to identify possibilities, what could happen, and then evaluate those scenarios and say, okay, considering all the evidence based off wave patterns and momentum and candlesticks and anything else I have in my toolbox, this one scenario has the highest degree of probability of actually working. Okay, but in doing that, I then at some point must take off my analytical hat and think like a trader. And in my opinion, what a trader does is they can't think in could, they have to think in is. I can't trade what could happen. I can only trade what is happening. Now, with that in mind, if we go back and take a look at what's going on in, say, the dollar yen on the daily and weekly chart levels, clearly the trends, the larger trends in those markets are to the upside. So I need to have my focus, again, to the upside, because that is what is happening in this market. Now, considering, say, the short-term weakening that we're seeing in price action, and also considering some of the bearish alternates, I know that I cannot just simply be aggressively bullish at this point. I need to be a little bit cautious, play the buy side, but be cautious in doing so. Well, that being the case, I need to identify, again, what I would consider to be, say, a key and critical support level. Now, the prior swing low here in the yen under this interpretation would be this pullback right here. I believe that comes in at 124.105. Okay, that's what I would consider to be key support. So any kind of decline, if this is indeed a key support level, we should see prices fall back to and then reverse from. In Elliott wave terminology, for example, say a key support level would be most likely a prior fourth wave extreme. That's where you're looking for prices to fall to and then reverse from. A critical support level, that has more impact. That has more meaning. A critical support level, for example, would be, say, the origin of wave 1. If you have a 5-wave move up and you're looking for a 3-wave decline, and that 3-wave decline moves beyond the origin of wave 1, well, that's a game changer. That invalidates the wave pattern. Now, in this instance right here, I would most likely consider, say, critical support to be the prior swing low. This right here. So what the wave principle really does bring to the table, in my opinion, and why, again, I continue to find it so valuable, is that it gives me choices. It allows me to be prepared. In other words, I'm never caught off guard. I know what to look for on the price chart. I know how to identify key and critical support levels. And so I'm always prepared. That allows me, from a trading perspective, again, which is ultimately what's most important, because I tend to be results oriented. I do this to make money. I do this to trade. I do my analysis to identify high probability trading scenarios and then implement them with the hope of actually, or not hope, that's a bad word, but in an attempt to actually take advantage of that knowledge or leverage that knowledge. Okay, so if we go back to the actual yen here, I tend to favor the buy side or the bullish scenarios that we're looking at. So and again, primarily because the daily and weekly trends are up. I'm very much of a trend trader. I love the trend. Okay, and also too, the most recent pullback we've seen of any significance certainly was not a 5-wave decline. That continues to argue for further rally. But short term though, I would like to kind of keep a very close eye on these two swing lows here, because if we fall back below a key support and subsequently critical support is penetrated on a closing basis, certainly a daily closing basis, then that would be price evidence which would actually argue that the flat interpretation is working out, or possibly the contracting triangle scenario is working out. That would actually make me want to begin to aggressively manage risk in this instance. So sometimes when you're looking at a price chart, it is possible to come up with, say, a bullish outlook and a bearish outlook simultaneously. Rather than being confused and frustrated with that outcome, with that result, utilize it to your benefit. And it allows you to essentially identify where you're wrong, where you're right. More importantly, it allows you to simultaneously develop buy-side trade plans and also sell-side trade plans. Currently, I like the upside. We're seeing a series of higher highs and higher lows. That's the technical definition of an uptrend. But I also know where to change my mind. I know what to look for that would argue that, okay, something's happening on a short-term or intermediate-term basis in which will most likely say possibly decline in this wave C of a pattern here. So this is today's lesson, how to take conflicting opinions or conflicting analysis, and it's not only the wave principle, it could be, say, an indicator and an oscillator. For example, if you're looking at MACD or RSI on the daily time frame, you might see, say, for example, stochastic on the daily time frame being in the overbought position. But if you look at the stochastic on the weekly time frame, the stochastic might be in the oversold. Well, which one do you go with? Which one's right? Well, again, what the wave principle brings to the table, it allows you to identify a number of different scenarios. More importantly, it lets you identify where you're wrong and when you need to change your mind. That's important not only from an analytical perspective, but it's very important, critically important, because it allows you to, again, think like a trader and identify when you need to abandon those buy-side trade plans and focus on more of a sell-side sort of campaign. That about does it for today's lesson. I'll see you tomorrow. Thank you very much.